Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Japan Tobacco stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Japan Tobacco is the third largest cigarette manufacturer in the world. Their top two brands are Winston and Camel. It operates in over 70 countries and its products are sold in over 130 countries. In addition to its tobacco business, it is developing a pharmaceutical and processed food business. The great thing about making cigarettes is you can make them anywhere. They're extremely cheap to make and very expensive to buy. So it seems like a really smart investment, right? The margins are great, the cash flow is huge. A big problem is many investors avoid companies that operate in tobacco, gambling, alcohol, and cannabis, the so-called vice stocks. Even though some of these companies are very profitable with high margins, they do not get as much attention as, say, a tech company. Just something to consider when investing in a company like this. A really big downside of investing in a tobacco company is that it is always dealing with negative publicity and lawsuits. One major lawsuit can be detrimental for this company. This company is part of the Nikkei 225 index and it became a public company in 1985. They're headquartered in Tokyo, Japan, and they were founded way back in 1898. It trades on the OTC Pink Sheets, Vienna Stock Exchange, Deutsche Börse, and Tokyo Stock Exchange. Let's get started with the model. This is a large cap company, 35 billion market cap. They're trading at $10 a share and they have 3.6 billion shares outstanding. Let's look at the financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. So you can see they have lots of free cash flow, 2.7 billion, way up to $4 billion. That's a lot of cash to work with. That's the cash that's remaining after paying all your expenses and investing back into your business. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also strong and consistent each year. Revenue is the sales for the company, and that's pretty consistent year to year. It did peak in the trailing 12 months at close to 20 billion. This is the company's income statement. The top line is the revenue, the sales. All their financials are in Japanese yen. I converted these numbers to US dollars on my Excel spreadsheet since we're looking at the ticker that trades in the United States. Here's a breakdown of their revenue. 62% is tobacco sales outside of Japan. 27% are tobacco sales in Japan. Then you have 4% from its pharmaceutical business, 7% from its processed foods business. Their pharmaceutical business focuses on R&D and manufacturing of prescription drugs. And the areas they focus on are metabolic diseases, autoimmune and inflammatory diseases, and viral infections. Their processed food business focuses on frozen noodles, packaged rice, and Japanese pancakes. And that business also operates in seasonings as well. It may seem odd to have a cigarette company also making frozen foods and pharmaceuticals. But it's not like they're making those products in the same place they're making the tobacco. When you're a big company, sometimes you acquire other businesses and you let those businesses operate on their own as if it's a separate business. But the management of this company oversees all those businesses it owns. Below revenue is the cost of revenue. These are the expenses directly related to generating the revenue. Cost of labor and cost of materials are all part of cost of revenue. Also depreciation and amortization. Revenue minus cost of revenue gives you your gross profit. Below that is their operating expenses, and below that is their operating income. They generate a pretty healthy amount of operating income each year. They do have a bit of debt on their balance sheet, so they paid interest of 44 billion yen in the trailing 12 months. And the bottom line of the income statement is their net income, which was highest in the trailing 12 months at close to 400 billion yen. This is the company's statement of cash flows from Yahoo Finance. In a little bit, we'll look at the statement of cash flows from their annual report to get a little more detail. The top line is operating cash flow. That's how much cash the company generates from its operational business. And you can see that peaked in the trailing 12 months at 550 billion. Then you have capital expenditures, which are investments in property, plant, and equipment. They have a lot of manufacturing facilities all over the world to make their products. For example, if they want to start selling more cigarettes in Austria, they may open a plant in Austria, and the cost for that facility will go into CapEx, and then it will be depreciated over time onto the income statement. Operating cash flow minus CapEx gives you your free cash flow, and they have lots of free cash flow. That's why they pay a nice dividend, as most tobacco companies do. They did buy back a lot of stock in 2019, 50 billion yen. When a company buys back stock, that decreases the shares outstanding, making your shares more valuable. They did add a lot of debt in 2018. That's probably to acquire another business. They added 400 billion, paid down 190 billion. They added a little debt in 2019. They paid down a little debt in 2020. And they paid down a good amount of debt in the trailing 12 months. This is the cash flow from operations section from their annual report. This shows us 2019 and 2020. And the way you calculate CFO, you start with your net income, that's 420 billion, and then you have to add or subtract the non-cash items on the income statement. Since they buy so many factories, they have lots of depreciation, so we have to add back 180 billion of depreciation. We also have to adjust for changes in working capital. If you ever see equity method or equity method accounting, that means the company has a pretty big investment in another company. So they pass through a $4 billion gain onto their income statement for that investment in that other company. But that's a non-cash item, so we have to subtract that out on a statement of cash flows. But if they receive dividends on that investment, then we have to add that here. And they receive 15 billion of dividends. So even though they reported a 420 billion yen gain, they actually generated over 519 billion of cash flow in 2020. Here's the cash flow from investing and cash flow from financing section. This is 2020, this is 2019. In their investing activities, they had a cash inflow of 5.4 billion yen, a cash outflow of 85 billion from PP&E, a cash outflow of 23 billion from intangible assets. You cannot purchase intangible assets, but you can acquire them through an acquisition, so this must be tied to an acquisition or merger. It looks like they received $17 billion from the sale of one of their subsidiaries, and they had a cash outflow of 300 billion yen in cash flow from financing. And the bulk of that is 273 billion yen paid to its common and preferred shareholders. They added 100 billion of debt. They repaid 11 billion of debt. They did a bond issuance that was 122 billion. They paid down 80 billion of bonds. And they paid down 18 billion yen on a lease liability. This is the equity section of their balance sheet. They have nearly 3 trillion yen of equity. They generated nearly 3 trillion yen from running their business, so you can see how profitable this business is. And retained earnings is a sum of all your net incomes minus the dividends you paid out. So this is after all the dividends they paid out. They're still so profitable. And they raised 736 billion yen from selling their business. And they bought back nearly 500 billion yen. When a company buys stock off the open market, it reduces the shares outstanding, so it makes your shares more valuable, and they put it onto their balance sheet as treasury stock. So this brings down your equity balance. Let's look at the capital structure. They have 25 billion of equity, 8 billion of debt. They're 74% equity, 26% debt. Their net debt is 2.8 billion, so they could pay off a majority of their debt if they wanted to with the cash on their balance sheet. And I gave them the highest whack according to Finbox, 6.8%, and that's a discount rate we're going to apply to the future cash flows. If a stock is in South Africa or China or other countries, we add a country risk premium to the whack. Because certain governments around the world have significant control over the companies in their country. So the stock price is artificially pushed down because of that control. You can see the WACC is pretty low in this country because we don't have to add a country risk premium to Japan. And the WACC is a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 90 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $82 billion. We divide that by 3.6 billion shares. And we get a calculated stock price of $23. They're trading at $10, so they're trading at a 57% discount. It's a buy according to the model. The average analyst projects their revenue to grow 1.5%. To calculate their future revenue, I grew at 1.5% for the next 4 years. To get their future free cash flows, I needed to see what percent of their revenue they convert to free cash flow. So I summed up these 4 free cash flow numbers. I divided by these 4 revenue numbers. And that comes out to 18%. So I multiplied their future revenue estimates by 18%. That's how I got their future free cash flows. Here are the countries. They have a pretty big market share in combustible cigarettes. Combustible means you could light the cigarettes. 60% market share in Japan, which makes sense. Nearly 50% in Taiwan and the UK. 38% in Russia. 25% in Italy, France, Spain, and Turkey. The largest tobacco company is Philip Morris, then British American Tobacco. They're third. Fourth is Imperial Brands. The company we're looking at pretty much has a 16% market share each year for the past 5 or 6 years. Their number one cigarette is Winston. They sold 155 billion cigarettes in 2019. And their second biggest is Camel. The most cigarettes are sold in China due to the large population. Then Indonesia. US is third. Each year, Americans are smoking less and less cigarettes. That's mainly due to the advertising trying to demonize cigarettes and cigarette smokers. Reduced risk products category is also growing every year. Japan Tobacco is growing their revenue in this market, and it's really focusing on growing it going forward. Examples of RRP are vaporizers and e-cigarettes. Simply Wall Street also thinks the stock is really undervalued. Their valuation is $24.45. The stock hasn't done so great in the past 5 years. It looks like it was $20 5 years ago. It's been cut in half since then. It's not like their sales are weakening. They're just as strong as they were 5 years ago, and their cash flow is even stronger. When different news stories comes out or the company gets sued because someone died from cancer, then the stock price goes down. That's what you have to deal with when you invest in a company like this. But they also pay a really nice dividend. So if the company pays a 6% dividend, the stock price will go down 6%. So if it never paid a dividend, the stock will be much higher. So you have to take that into account when investing in a company that pays a high dividend. They pay a semi-annual dividend. Their dividend yield is close to 6%. It looks like they decreased their dividend in June 2021. It was 34 cents in December 2020. But even though they pay a really nice dividend, that's still only 59% of their net income, 52% of their free cash flow, so they can easily afford this dividend payment. They pay a similar dividend as their industry, and analysts are forecasting the company to grow their dividend to 6.7%. You'll notice high dividend paying stocks have a low beta because they're not too volatile. Their beta is 0.52, so it moves half the market. It's gone down 4% in the past 52 weeks, but it's gone up if you add the dividend payment. While the S&P is up 29%, the 52-week low was 9, the high was 11, and the stock is trading above its 50-day and 200-day moving average. Only 150,000 shares are traded each day on this stock. Of the 3.6 billion shares outstanding, 2.2 billion are on float. If a share is on float, that means it's available for investors like me and you to purchase. If a share is not on float, that means it's held by an insider and it cannot be purchased in the open market. Their employee count has been pretty steady the past couple years, but it's up a little bit since 2015. They employ 58,000 people all over the world. If you invested $10,000 into this company when it started trading and reinvested the dividends, you'd have $6,000 today. That's a 40% loss. But you don't lose anything until you sell the stock. So if you're still holding on, you can keep collecting those dividend payments, and hopefully the stock price goes up and you can sell it for a profit. The Japanese government is the biggest shareholder. They own 38% of the stock. The two large Japanese investment banks, Nomura and Sumitomo, own stock as well. Then Vanguard and BlackRock. Let's look at their financial ratios. They have amazing price multiples, a great PE of 10. That's stock price over earnings per share. That means investors are paying $10 for $1 of earnings. A really good price to sales of 1.8 and a really good price to book of 1.4. They have a great return on invested capital of 13%. They can cover their interest payments 13 times. They have a high ROE at 14%. They have a good current ratio and quick ratio, 1.6 and 1.2. They have lots of cash on their balance sheet, lots of inventory as well. So this company is a cash cow. It has lots of cash flow coming in, nearly $4 billion in the trailing 12 months. They have over $7 billion of working capital. Working capital is current assets minus current liabilities, and they pay out over $2 billion in dividend payments, so they have over $9 billion of funding. The best way to look at ratios is to compare them to companies in the same industry. I've done videos on British American Tobacco, and Altria, the parent for Philip Morris. And if Japan has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They're better than average in every category, except they're a lot smaller, only 35 billion market cap. These other two companies are 80 billion. And they do pay a smaller dividend. Even though they pay a good dividend, both these companies pay over 8%. So to summarize, I have them trading at a 57% discount. But just because a stock is undervalued doesn't mean it will go up. But as I alluded to earlier, tobacco companies have a negative image. Lots of investors and big funds don't like to invest in these type of companies, even though they're really, really profitable. But they do offer a really nice dividend to try to sweeten the deal and get more investors to buy the stock. Tobacco was around way before we were born, and it will be around way after we die. You can't think of that many things that fit that description. Computers were not around way before we were born. Neither was phones or airplanes. They're pretty recent. Packaged foods are pretty recent. But tobacco has been around such a long time. A tobacco company has guaranteed sales because there's so many people addicted to their products, which is really good for an investor. It may not be so great if you have morals, but for investing, it's really good. I rank their free cash flow as 9 out of 10, their revenue 8 out of 10, and their ratio is 9 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.